Hi, I'm Butani from Fidelity Mortgage Lenders at the California Mortgage Association in San Diego, and we're trying to get some insights for our CMA members and everyone in private lending. And here's Peter from Fidelity Mortgage Lenders, who's a commercial real estate private lender, and his company's been around for a long time. So, Peter, thanks for joining us.
Thank you, Rocky.
And wanted to ask you, a lot of people here at the last few CMAs, they all kind of know you as the cannabis lender in California, but obviously you do other commercial property types. You lend on a wide variety of specialty property types and the core commercial property types.
Yeah, so it's funny because we talk about cannabis so much, and I don't want to be known as just a cannabis lender because we do quite a bit more. I think our cannabis portfolio is under 5% of our current lending portfolio. We do commercial properties, industrial, retail, office, apartment buildings, mixed use. Occasionally, we'll do a gas station. We can do motels, almost any type of commercial property, except we don't do hotels, but we can go up to $20 million on a loan. And one of the things that makes us a little bit different than maybe some of the other private lenders is that we offer a 20-year fully amortized loan and a 32 and 15. Most other people in our space are, a bridge lender, 1 to 3 year interest only. So we provide the short and long-term product as well. A lot of nonprofits, churches, temples, synagogues, they love our 20-year fully amortized loan because then they don't have to worry about paying us off in 1 or 2 years.
Because it's probably going to be hard for them to refinance out of it.
It can be a challenge refinancing out, or if you're a small balance lender, if you have a $200,000, $300,000, $400,000 loan, most banks ignore you. They don't even want to talk to you. So for somebody like that, if they're not sure if they're ever going to be financeable by an institutional lender, then they're like a 20-year product. And if they do, it doesn't matter. We don't have a prepayment penalty. They can pay us off at any time.
That's great. And right now, mid-2021, what's in demand in terms of commercial real estate private lending? Is it office? Is it retail? Is it?
So during COVID, what we found was it was mainly capital. People needed access to capital. So if you have a restaurant or even a church or you run a small business out of an industrial building or out of an office building, people needed capital because they weren't sure how long COVID was going to last. They weren't sure how COVID was going to affect them. So they figured, hey, if I can cover my expenses, for the next maybe 12 months, then at least by that time we should see the light at the end of the tunnel. So the big demand was this refinancing and capital.
Cashing out equity.
Cashing out equity.
And their commercial property for working capital for their business.
Exactly. People were cash poor and equity rich, so they were able to tap into that. And banks were not lending to, banks that don't like cash out loans. Banks were not lending to businesses because banks didn't know what was going to happen. They weren't sure what was going to happen to somebody's business. What we're seeing now is we're seeing some restaurants coming back, needing capital to restaff, maybe to update the restaurant, and just to get some working capital again. We see a lot of refinances from industrial buildings. Churches have come back. I mean, it's across the spectrum. There's not really one particular niche that I can say is dominating our loan requirements right now. Yeah.
But everyone talks about the properties being repurposed. Is any of that happening now, or is
So what's happening is because I still have clients in the commercial real estate space because that's my background. So I have a client right now. They have an automotive site, 4,200 square feet, 14,000 square foot lot. And the automotive industry has changed. So many people are leasing their cars now. So the small mom and pop auto repair places, they're really going out of business. And so they realized this. They said, look, why don't we reposition this property, sell it? We're in escrow now with a doctor who's going to repurpose that property for medical use because you have all that land, so you have the additional parking. So that's why we never shied away in terms of lending on, let's say, a restaurant with a nice parking lot or a retail location with nice parking, because that can be repurposed to office, medical space. Gas stations you can repurpose for if it's on a nice size for mixed-use development. For example, there's a site we sold on the corner of Fairfax and Sunset. So repurposing existing real estate, I think, is the next. Well, it's not the next best thing, but that's what people are doing now.
Okay, excellent. And for those types of loans, I'm assuming you don't finance the repurposing part. It's just a bridge loan. It's a refinance or a purchase.
Well, it's a bridge loan, or it's just somebody comes to me and says, I'm not going to lend on retail anymore. I'm not going to say that. I'm not going to throw all retail into the same bucket. I'm going to look at the retail side and say, okay, we got a nice parking lot with it. We can reposition that. We can reposition the restaurant. So if I make a loan against it, I'm not worried about just getting another retail if it's a restaurant, I'm worried about somebody saying, oh, I'm only going to buy it and put my restaurant inside. I can say I'm going to sell it to a developer. I'm going to repurpose the building. There's a restaurant that they're putting a Starbucks on there now. So I look at each real estate transaction and just say, hey, what else can I do with it other than its existing use? But then you have to really be careful when you reposition a property. You have to look at the specific plan of the city. You have to look at the FAR, floor area ratio. You have to look at height restrictions. You have to look at what you can build by right, or maybe if you get a conditional use permit, what you can build. So there's a lot more moving parts than any kind of property reposition.
Okay. But do you explore all of those options when you're considering just any property, or is it just those specific specialty property types?
It's really those special property types. Industrial, you're really not going to reposition it to anything else. And why would you? Industrial is the hottest thing around right now. The only thing we've done is we looked at sites and said, hey, there's a site we did in Burbank. We pushed the loan to value higher than what we normally did because I knew that probably could be repositioned to self-storage.
Okay.
Which in the right area is even hotter market than the industrial properties. Yeah.
All right. Well, thanks for sharing all those insights. Yeah. If anyone has a need for a commercial property bridge loan in not only California, but all the Western states, up to $20 million, reach out to Peter from Fidelity Mortgage Lenders, and hopefully he can get your deal done.
Yeah, thank you.
All right. Thanks for joining us.
All right.